Welcome back, my awesome people. I'm here again with Sylvia Jablonski from Defiance ETFs. She is going to be introducing us to a revolutionary ETF, the BattleShares. Now, I'm not going to spoil it because I want her to tell us all about it. And for those that did not see our first interview, you should definitely check it out because we went through some amazing analysis about Defiance Analytics and what they do. And also, Sylvia is going to tell us today about what the future is going to hold for EV and combustible engines. So Sylvia, welcome back to the Another Jacob Rant channel. So for those that didn't see our first interview, can you just give us a little background information on who you are, who Defiance is?
Yeah, and thanks so much for having me back again. It's always good to come back and be reinvited. I appreciate it. So I'm the CEO and the CIO of Defiance ETFs, and we've been around since 2018. We consider ourselves the leaders in thematic ETF investing, single name leveraged stock investing, enhanced income, and now the newest brand under our umbrella is pretty much BattleShares, which is what we're here to talk about today. But yeah, I mean, we've got between 20 and 30 ETFs now in all of these different spaces. We tend to target that next generation of investors that wants to do something a little more exciting with their money, and we focus on innovation and disruption. And I've been with the company for a long time, basically a couple of years since inception, and my background is ETFs and equity derivatives trading.
That is amazing because based on our last conversation, which was just a few months ago, a lot has happened since then, including ringing in the bell at the NASDAQ for the MicroStrategy 2X Long ETF, ticker symbol MSTX. Can you just tell us a little bit about that experience and maybe just a little bit about that ETF as well?
Yeah, so MSTX is basically a 2x single name leveraged MicroStrategy ETF. And so that one is for, investors that are very much active traders. They kind of understand the risks of levered and inverse ETF products, right? They're power tools basically, right? So you have to have high conviction on the underlying name and also conviction on the trend of the directional trend of the stock itself. And so the reason we went with MicroStrategy is because we just thought there's so much just buzz and excitement and assets flowing into all things crypto, right? And that's everything from Bitcoin to the Bitcoin ETFs to the different types of Bitcoin ETFs and the platform related products like Coinbase and Robinhood and all that kind of stuff. And we were scouring the market and thinking to ourselves what else is crypto friendly? What are we missing in this market? And then we started thinking about every day we see Michael Saylor on TV talking about crypto and Bitcoin and how much Bitcoin he's buying. And then you start looking at the stock and you realize that just even without the leveraged, it's a leveraged, kind of result or play on crypto and Bitcoin. And then so we thought to ourselves, this is perfect. We should come out with this. This is for investors who are active traders, love Bitcoin, Michael Saylor, and the phenomenon just kind of grew from there. There's been so much interest in that product, and again, it's another proxy for Bitcoin, and it tends to trade like a leveraged version of that. And then we have 2 beta on top of whatever it's doing on its own. So short-term retail traders, savvy day traders, they love this product. And then the bell, we got the opportunity to ring the opening bell at the NASDAQ, and it was really cool. They put up the ticker in Times Square. We got to invest. We got to invite all of our investors and kind of the people who supported us from day one and allowed us to even launch this company, and they've been along for the ride. And it's really one of our most successful ETFs to date. And so it was a super cool experience to do that.
I can imagine not only the experience, but just the MicroStrategy ETF, as you know, with Trump now in power and he's all about the Bitcoin reserve. A lot of countries, a lot of corporations are starting to create their own reserves. So I think this ETF not only is going to be successful in the short term, but definitely in the long term. So Sylvia, let's get right into it with the BattleShares ETF. So just to briefly, from my understanding, is you are pretty much pitting the Tesla company and the Ford company. One is EV, one is internal combustion engine, which is the traditional form of cars for the past how many decades. Can you just talk more about the BattleShares? What inspired you to create it? What does it mean? I know when it comes to Tesla, it's more of a long play, and the Ford is a short term or going short. Can you elaborate on that?
Yeah, sure. So, the idea of battle shares is really to just gain exposure to sectorial rivalries, for lack of better words, right? Like there are these different stocks that really duke it out in various sectors, and investors have really strong opinions on both sides, of like kind of who's going to win, who's the big name, who's the worst name. And sometimes those opinions are flipped, right? So a lot of investors think that like Tesla is the best auto stock. Others think that it's the worst. And, so the idea of creating battle shares is and we're kind of like going slow. This is a new brand, right? So it's to start introducing these pairs, and they might end up going both ways. We might have, long shorts of the same thing flipped. So it's really up to the investor to make their call. But our first thought was, that next generation of traders, tends to have strong beliefs about Tesla, right? A lot of people think that Tesla's a tech company and it's the future of driverless cars and robots. And, they have their own technology. They have their own AI. They're ahead of the game in batteries and supercharging stations. They make revenues from different things, whether it's like solar panels or charging stations or the cars themselves. They have, pricing power. They can reduce costs on units more easily than, say, a traditional automaker. And then, as a world, really, we're very focused on climate neutral 2050, and a lot of that gets resolved with things like electric vehicles, if enough people drive them, obviously, and kind of convert to them. And then on the other side is Ford, which is like the all-American automaker that we all know and love, but they don't have their own technology, right? They don't have their own AI. There won't be any Ford robots. They have issues with unions and like kind of like price sensitivity, supply chain issues and things like this. They actually, in the EV space, they're not at all thriving in terms of like that next gen vehicle in the EV space. And so, this is for the investor who just thinks that Tesla is the future, and Ford might be, the steady Eddie, but like it might get pushed into the past as technology kind of takes over, and electric vehicles become more of, just call it like an adopted prospect by drivers. Yeah.
Exactly. And as you obviously know, a lot of countries and states are projecting a 2030, 2040, no more combustible engine future. Yeah. It's all about electric cars, especially here. I'm in Canada, so we're aiming for a 2030 only EV cars push. So I think Tesla and other EV sectors will definitely flourish. And again, that is the ticker symbol ELON, Elon. Yeah. And just to stay on that, Elon
We love that ticker, by the way.
I love that ticker too. It's easy to remember. He is the creator of Tesla, so it's perfect. Yes. And just to stay on that, Elon is in the White House now, and he definitely has much leverage on passing legislations and laws for the EV sector. What do you think about his position, not only in the White House, but he kind of does have a lot of power now to push for the EV sector, so it just makes sense.
It does. I mean, it's hard to predict how this relationship will go and how it will continue. But from what we see stateside and, what everyone sees globally is that these days when you see President Trump speaking, Elon is somewhere there, next to him. He's in the room at least. And he has a big role. I think that there seems to be this, and I don't want to say reliance, but maybe just, respect and consideration of a very, intelligent person's views on different things, whether, politics or tech or regulation and things like this. And so, he certainly has the ear of the right person. And, not only that, I do think, like, politics aside, whether or not you like what he's doing in DC or whether you, like the association or you don't like the association, with the party, I mean, he is arguably doing things that are incredibly brilliant and the way to the future. And so I think that, obviously, because he has the president's ear, perhaps some of these things, if nothing else, you are going to hear about them because he is constantly Googled and seen on television. And so there's this wide level of, and owns X, right? And this wide level of just vocalizing his future projects and plans. But as they write policy, and, you're just talking about Canada, like, if there is policy to kind of cut down the amount of combustibles here in the US and things like that, I mean, he would be a beneficiary. I think regardless of his position in DC, he's just, kind of the leader here. And so it does matter. What we're seeing, though, is kind of interestingly the opposite, right? You have all of this weird stuff going on where people are on strike because they don't like that he's, working on Doge, and so they're burning or stealing superchargers. I don't know. I've just like kind of seen all this silly stuff, but I think that he is a technology wizard. Teslas are arguably, own the market of EVs. And so I think that if EV adoption continues to pick up, then Tesla is obviously well positioned to benefit.
Definitely. I mean, I can't really imagine Ford or Chrysler or any of the big three in any way catching up to the EV sector, especially with Tesla. They were the first out of the gate, and Totally. They are the king of EVs. And so with this unique ETF, Elon, what measures are in place to mitigate any risks with this leverage position, especially with the volatility that is currently going on, not only with Tesla, but with tariffs? Cars are now having these crazy tariffs on top of them. So what type of risk can you or mitigate these risks that are coming up?
Yeah. And so this is a really hard question to answer, because I think it would be like disingenuous to say it doesn't matter and, it's a great ETF and all that. I think it's a great ETF and a great concept. But the fact of the matter is, I mean, Tesla is pulling back. The entire market's pulling back. Ford is pulling back. They're at their recent, kind of like record lows. And so, but the way that I invest, and I think is like times like these, it's the Warren Buffett thing, right? When everybody is fearful, get greedy, and when they're all greedy, be fearful. And like we're seeing that now, like we're finally starting to get into some oversold territories, some technical corrections. Mag 7 are really eating it, for lack of better words. I think the market looks to those names to be the leaders. And I think when you kind of see earnings paring back, I mean, they still have phenomenal earnings stories, but the market's just like not as impressed as it used to be. And so Tesla's in that camp. I think it takes time, but my roundabout answer is to say that these are when generational opportunities are made, right? In stocks, whether it's Tesla, whether it's Nvidia, whether it's Amazon, like these stocks that get crushed every couple of years are the ones that then rally 30, 40% over the years to come afterwards, right? And so I think that Tesla has been particularly, suffering in this market. And so what I would say is, you can't mitigate that risk. If the stock is going down, this ETF will perform poorly. I mean, that's just a fact, right? But I think if you, as an investor, are looking for bottoms, and they're impossible to call, first of all, but if you're getting to a point where you feel like, okay, the froth has really been taken off now, I expect this stock to rally and to start trending upward. I think once you get yourself to a point where you believe that there will be a trend for a couple of days in that stock, that's when you perhaps enter into an Elon position, because it is leveraged on the long side. So as the market's going up, you're going to get outperformance. Compounding will work in your favor. But these types of range bound volatility days, it's you kind of have to suffer through them a little bit, or just like understand that it won't perform that well when both stocks are down.
I definitely agree. I mean, it's not just Tesla or Ford that are taking a pullback. Pretty much the whole market.
Just about everything, right? Besides
exactly. I mean,
European sovereigns and defense names and a couple staples, and I mean,
even crypto is taking the biggest hit these days.
Crypto is taking a hit. Yeah.
It's an overall market, and so even though Tesla and Ford have been around for at least many years now, why was right now the most optimal time to launch this type of unique ETF?
Yeah, I mean, call us, contrarians, but I think that just in my experience, the ETFs that get launched in these type of market conditions, when people can kind of like pick their lows, like tend to pay off over time, right? Because the markets end up rebounding and kind of recapturing performance, and we start to see that the economy is still in good shape and all these sorts of things. So basically, we're ripe for a rebound any day now, right? So I actually like launching in these dismal markets because it gives traders an opportunity to buy in at the lows. And in all fairness, most of them don't. Most of them kind of sit on the sidelines and wait a little bit. But I still think that like the runway period now of getting a discounted buy is pretty good, whether it's today, whether it's next week. Like we're pretty far off the highs of Tesla here.
I agree because I mean the best time to buy is when things are on sale as they are right now,
Yes.
and for the average investor, Tesla is technically a household name, even though if you don't own a Tesla car. And so if you're looking, say, 3 to 5 years, do you think Tesla will not only just be a because your battle shares is Tesla as a whole. So not only
Yeah.
is Tesla just a car company, but as you mentioned, it is also a tech company. So in the next 5 years, 3 years or so, do you see Tesla evolving to something even more? You know, they do have the robots that are that Elon highlighted a year ago. Where do you see Tesla in the long, since this is a long leverage?
Yeah, I think it's all of what you mentioned, right? I think that they get like if you look at the revenue growth in their solar sector, right? I think they end up having solar leadership. I think driverless cars, you know, robo taxis, robots. I think all of these things become major contributors to the company over time. I think that a lot of times, you know, Tesla and Elon Musk are doing things that like the world is not ready for, and then all of a sudden, like, oh look, he's in space, right? So, I think it's the type of company that you know, will produce generational returns. And I think that it just like takes time because some of the technology is actually like, you know, like things that need to be highly tested and developed and R&D and all that kind of stuff. But this is a stock that you have a really long-term view on, right? And yeah, so I do think that the company's portfolio of businesses will continue to expand. And it's not just a car company, right? And then you do have this kind of association with SpaceX and, you know, kind of like all the stuff he's doing with satellites. And, you know, I just think that you have like, I think when you invest in Tesla, you're investing in a high tech company and not just an EV company.
And I mean, he's the guru when it comes to space technology,
Right.
environmentally friendly cars. I mean, he's surpassing. I mean, I think NASA is hiring him at this point or giving him the contracts to do
I
anything
know.
space
Yeah.
related. So, um,
Right.
and so, are there any other plans to introduce other BattleShare ETFs? I saw on your website that it says more to come.
Yeah.
So, is there going to be like an Apple
More to
versus
come.
Google or something of that nature?
Yeah, so we filed for a few of them. We're not allowed to like kind of like talk about or
Oh,
promote
definitely,
ETFs.
definitely.
Yeah, but I can just kind of tell you which pairs are effective and kind of like not really describe why just because of that requirement. But like, you know, Amazon versus Macy's is out there, Nvidia versus Intel is out there. So, you know, Google versus New York Times, like there's a couple of interesting ones that are filed out there. And I think and we have a list of these, right? We have so many of these that we're looking at. And I think the idea here is like the old guard versus the new way of thinking you know, and kind of let them battle it out and, you know, double down on the new guard and short the old guard. But that being said, we've also talked about flipping them all too. So we will launch them based on the market's feedback. So if we start seeing that there's a lot of investor interest in this one, or if investors tell us we want to be long, for and short Tesla, like we will, you know, we
You
listen to our
listen to the
investors.
people, you listen to the
Yeah, we listen to
investors.
the people. We let the people tell us what to do because, you know, definitely like over time in this business, you learn that you can have the best idea ever. And if no one cares, no one cares. So
Exactly.
we,
The market speaks for itself. And
market speaks for
so
itself.
and so when you're determining which companies to pair up or I guess pin each other against, what factors do you look at? Is it just the fundamentals, the financials, or do you also look at what's going on macroeconomically? How do you
Yeah.
choose the companies that you want to battle it out?
So all of the above, everything that you mentioned, and then on top of that, we do, you know, we do natural language processing. We do like consumer sentiment screeners. We do everything. Like we listen to you and like, what are you talking about? What are, you know, what are people talking about on Reddit? Like, what is the
Yeah.
like social media score? What is the retail trading score? Like who is trading what according to the brokerage firms? And, you know, we try to really kind of look and see what is popular based on many, many factors. And then of course, like technicals, fundamentals, things like this, market movement, like it's, you know, it's hard to, we're sitting here today, right? Like it would be hard to, if we had NVIDIA and Intel, you know, that would be a tough one, right? I don't know that it would gather assets today, right? So yeah, I mean, a lot of it is a little bit of timing, a little bit of luck, but one of the things, just as a company, we're very interested in what the market is telling us that they want. And we view the market not only as like the institutional players where you're getting kind of like that high level data about, you know, big banks or registered investment advisors or hedge funds. Like we care a lot about what the general public, day traders, people like me and you, like what are we talking about, right? Because that's a lot of the time what makes the market too. So
No, I absolutely love that because you have to see what's happening, what people are talking about, and Reddit is the best place. I mean, I love Reddit. I go on Reddit
yeah,
pretty much daily. And
yes,
so when I first saw the battle shares and I looked at the weighting of the holdings and the details, it pretty much affirmed my thoughts. I know that EV, Tesla specifically, is going to be the future compared to the big three. So I
yeah.
think it is kind of influencing investor perception just in the real world, in reality as well. Do you think that is also true for what you've seen? Do you see that because this battle shares is out now, people are like, okay, this actually makes sense compared to only single stock investing?
Yeah, it's something new. It's, you know, I mean, people have done relative, I shouldn't say it's so new because the concept of relative value trading has been around, you know, forever, right? And pairs trading has been around forever. Um, so people kind of like make these decisions on their own. A lot of hedge funds can structure this in a swap and in a note and stuff like that. And but it hasn't been around in an ETF wrapper in this way. And so what we did is we also like the idea of democratizing things, right? So like let's democratize what the institutions do on a day-to-day basis and have a lot of success with for retail clients and let them decide. It's a lot easier than you having to go, you know, open a margin account, like, you know, whatever, short stocks, do your own stock loan with these high, you don't know, you know, you're getting a good fee, a bad fee, whatever it might be. It's easier for us to wrap it in an ETF and then you buy and sell it as you wish. And so there's that also, you know, that kind of thought of democratization is there too.
And that's the point of investing, right? You have to make sure that
Yes.
not only do you look at the details, but you also have to look at everything else around it. So I know Elon ETF does carry a 1.29 management fee. So
Yeah.
does that mean it is very, very actively managed? So what I'm trying
Yeah.
to say is, so as you said earlier, if
What is the fee for?
investors, yeah, so if
Yeah.
investors want to go long
Yep.
on this, we'll change it up. If they want to go short on this, we'll change it up. So I'm guessing it's very actively managed.
Well, so this fund itself won't shift. We would launch another fund, right? If investors wanted to
Okay.
short on. But what the management fee for levered funds is you have a lot of, you know, behind the scenes, like you have swap contracts, you have ISDAs, you have equity derivatives that have to be managed on this on a daily basis. It's traded, you know, it has to be traded on a daily basis, has to maintain its leverage point. So there is a lot of active trading that goes on with levered and inverse ETF products. They're generally higher risk. They carry, you know, again, leverage and derivatives and stuff. And so like you have to manage all of that risk. And it's not quite the same as like just benchmarking to a passive index, for example, where, you know, that's a little bit less hard. And so it's, you know,
There's a lot
arguably
of moving
have
parts to
lower
it.
fees. Yeah.
And so when you were launching this ETF, were there any regulatory challenges? Was it hard to get it out in the market, or was it pretty smooth sailing?
It was pretty smooth sailing. I mean, you know, there's an ATF for there's a derivatives rule, and you have like certain guidelines that you have to meet, and as long as the funds meet those guidelines, then you know it tends to have an easier time, you know, getting approved and stuff like that. So you know, we basically like meet all the requirements of the derivatives rule and the different rules around levered and inverse ETF products, and so it wasn't difficult. Like, believe it or not, it's sometimes harder to launch single stocks because of how volatile they are, right? And you have to fit into that. They call it the VAR test, right? Like you have to fit into the scope of what regulators permit for leverage funds. So if anything, this is like a lot less volatile than some of that stuff.
Well, that's good because
Yeah.
volatility is not everybody's favorite thing.
Cup of tea. Yeah.
And as CEO and CIO, what excites you the most about this ETF? I know this is a unique ETF. It's, you're starting pretty much a new wave of ETFs that are coming out. So what excites you about this? Because when I first read it, I love the
Yeah.
website. It looked like like a old school type of video game where,
Yeah.
old
That, yeah.
versus new,
Yeah.
the modern versus traditional. So what excites you about it?
So first of all, I love the marketing. I mean, that's not really
Yeah.
the best they're about to, I'll get to the product next, but I love the marketing. I love the video just because you mentioned it. I love the video game thing. I think like we're trying to really get investors pumped up about this and getting them arguing back and forth and like, having people with different opinions, like really out. Like we kind of wanted to create something here. I think the market and what's going on with the market right now is kind of in the way of that, but we hope that it comes to that where people are like, no, this one sucks. No, we want this pair or that pair. Like we love
Yeah.
the idea of taking it out because as investors, I think there's just been this like societal shift of since COVID really of like just young people and people who are so into stocks now and markets now and like they fight about it and like we in a good way, right? So we kind of
Yeah.
liked the sentiment of this. But in terms of the product itself, I mean, I love that you can lever up something that you have really high conviction on and short something that you have low conviction on within one ETF, because as an investor, that is just really hard to do. And I love costly, you have to rebalance all that kind of stuff. It's not that it's rocket science, but it's costly and cumbersome. And so I think this actually solves for something. And the other thing is I'm so excited about the pairs, right? The pairs that we're going to have out and some of the ideas that we throw around, I mean, you can just think of like any sector, whether it's, crypto, retail,
Even like
treasury,
Microsoft and Sony when it comes to even just gaming, like
yeah,
that would be a
like
really cool one.
that would be a cool one too. And you can like get really excited about this. And so I think that, if this has some adoption behind it and some steam behind it, it's something that we would continue to do. But again, like it's going to be up to the market, right? Sometimes you don't know until you give it a little bit of time and you see how people react to it. So we'll see, we'll see what happens.
Exactly. And I mean, right now with technology, the quantum chips and like everything is just moving so fast. I mean, within a year, we went from processing systems that NVIDIA couldn't keep up with to now quantum. And it's just
Yeah.
amazing. And Microsoft just released their quantum chip just a couple of months ago as well. So everybody's on board with this. Do you
Yeah.
think,
And we have a quantum
yeah,
ETF, by the way, that like,
yes, you do. Yes. And it's a five
yeah, we
star
have a
on
quantum ETF.
Morningstar.
It is, and it's been around since 2018. It was the fund that launched our company, and no one talked about it. And then like you had the Chat GPT moment and AI, and now quantum, and that's actually become the most popular ETF that we have in our suite. Like even more lately, more popular than MicroStrategy, which was an ETF that like my phone rang off the hook all day long about. So I think the main like exciting topics, I mean, and I think we're like covering so like Elon Musk, all things Elon and Tesla, all things crypto, right? And then quantum computing. I mean, those are kind of like the hot topics in the market in terms of stocks, minus this backdrop of panic on
Yeah.
tariff stuff. But yeah, so we're excited to be positioned there in all three.
And it's going to be revolutionizing every sector, healthcare, medicine, pretty much everything. So what do you think about the traditional car companies? Do you think that they will ever not compete with Tesla, but ever get to a point where they can actually maybe compete with Tesla or even any other EV car companies? Because I know right now in China, there's like at least 20 EV car companies. They're all competing with one another. It's hard for them to come over here across the pond. But what do you think about the big three just in general? Are they just slowly getting there, or are they also fast tracking their technology?
I mean, I think GM is, I guess, arguably has had a little more luck in EV than say Ford. I think that Tesla is just the leader here, and there's so many reasons for that. There's the battery, there's the charging stations. Like these other car companies just don't have the infrastructure right to support it. It's almost like they have to use Tesla charging stations to get their own car charged. Which is like, so I just think that they have an uphill climb to catch up. I think I think though it's just so interesting because I think in Canada, right? If you speak to a lot of Canadian investors, like they know that EVs are the future because there is no choice, right? There's
Exactly.
like a mandate. In the US, it's not like that. You have a lot of investors that are, or a lot of drivers that are just like, it's never going to be like that. I'm keeping my, combustible, and this is how it's going to be, and whatever. So I think that in the US, it's going to take more time than it will in places like Canada, and even in some places in Europe. But eventually, this starts to happen, right? These seismic shifts come, and they take a really long time, but eventually they're implemented. And then at that time, I think, now it feels like there's a pause from the storm because EVs aren't doing that well. So the traditional motor companies are like, that it's like not going anywhere. It's 6% of all the cars, or the numbers are pretty low.
They're
But I think
thinking,
that
oh, we already knew this was going to
we already knew
happen.
this was going to
Yeah,
happen, and but I think if we really start to see global EV adoption continue, then they're going to have to get back in the race because you know, they won't
they're gonna
really.
miss the opportunity, I would say.
Yeah, I think so. I think so too. Yeah.
Yeah,
And
and
I mean, obviously we all want that to evolve.
exactly.
um, yeah.
And I think when it comes to transportation, like to come back to the Canadian point, most of our buses are now EV. Most of our even Zamboni machines at ice rinks are EV. So
Yeah.
it's pretty much
Yeah.
and plus, in the United States, you guys have 10 times more the population, I think 400 million, whereas we have about 40 million.
Yeah.
But still, our adoption is hopefully going to help the United States adopt the EV sector as well. So with the BattleShares Elon that you have currently, are there any new strategies or strategies that you want to include in the near future?
Yeah, again, like I couldn't disclose what we're going to do,
Oh,
but there's
definitely.
definitely a list. Yeah, I wish I could, but there
That will be the
are.
third interview.
Yeah, I mean, so yeah, several are filed, and I think that there's a good case for a few of them here. So we'll probably, you'll start to see those coming to market, I think, in coming months. But we thought this one was like a mic drop in terms of battle shares, right? But again, it's tough. Like I think the backdrop of today's market is distracting, right? And so we need to kind of get past that and then just kind of see where we land with this.
No, I mean, this is revolutionary. This is a game
Yeah.
changer. Personally, I've interviewed so many companies, and not once have I seen a BattleShare style ETF, and I'm highly looking forward to it. I am definitely investing. Personally, I'm going along with Tesla
Awesome.
as well. I believe in Elon. I believe in his vision. He's already revolutionized space, Earth. Maybe next it might be underwater. Who knows? Uh,
Yep. Yeah,
um,
EV submarines.
Exactly.
Yeah.
Submarines that can go to the depths that we've never been to. And I
Yep.
know we kind of talked about this in the last interview, but cryptocurrency, of course, right now, you have Donald Trump, you have countries, other corporations, especially with your MicroStrategy ETF, creating reserves and pretty much adapting and adopting the crypto sector into their financial sector, especially with XRP being a big name as well. So to repeat the question I asked last time, do you think Defiance might create a crypto based type of ETF, whether it's Bitcoin, Ethereum, or anything of that nature?
We might, but it probably won't be what you expect.
I like
It'll
that.
be better. It'll be better.
I love
Yeah,
that. I
good
love
ideas.
that.
Definitely have some good ideas.
And Sylvia, every time I talk to you, it's always pushing the boundaries, always thinking of the next step. Because a lot of firms, they're just doing the typical, they're doing the traditional, right? They're doing options, covered calls on single stocks or the traditional type of stocks. But I think BattleShares Elon is an amazing ETF, and I'm looking forward to more
Thank
of
you.
those type of BattleShares because it's just different, and the way that things are going, especially with the younger crowd, we love this type of pitting two companies together, seeing who will battle it out, the conversations, the Reddit arguments in a good way. Those are always amazing. So what is going to be happening in the next few years for Defiance? I know you just introduced the battle shares. Quantum and MicroStrategy are doing amazing for you. Is there anything else coming up when it comes to whether it's stocks or ETFs or anything of that nature?
Yeah, all of the above. I mean, we have filed for a lot of funds. So we're going to continue to expand in areas in the single stock market where we think that there's appetite for traders, stocks that aren't out there yet. or maybe names that are out there that, you know, we think we could manage in a different way. We have some income ideas. We have more BattleShares ideas. We have a couple of really cool thematic ideas in the pipeline. And so, you know, you'll see us continue to expand our lineup and try to bring, you know, innovation, disruption to the market, and like really mean it, right? Like just put some cool stuff into the market that we think will work pretty well.
Definitely, because and I love that, pushing the boundaries again, the trailblazer, you know, the traditional way of 40% mutual funds, 30% stocks, and this and this. You know, in my personal opinion, I think those days are over with. I think it's time
Yes.
for a refreshing way of investing, especially now that we can invest right from our cell phones. It's the new wave. Sylvia,
Yes.
this was amazing information, not only about Elon, but also about the future of EV and the future of tech. Is there any other last mentions or anything coming up for Defiance or for yourself, or any of your suites that you would like to mention?
Yeah, just keep an eye on us. You know, we announce everything on X, on LinkedIn, and you know, you'll see we definitely have we have some launches this week actually.
Oh, do you want to
Yeah,
talk more about that, or?
I can yeah, I can't, they're not out yet, so it's the same kind of thing, but I can tell you, like, because they're effective. So we're launching a levered, like 3 single name levered ETFs this week, basically. And,
Nice.
you know, they're kind of in the world of like telehealth, quantum, space, some hints. You know, you'll see them out on Wednesday and Thursday. So there's 3 of them. So that's going to be really exciting, and you know, you can kind of follow us on X or LinkedIn or wherever, you know, and you'll see what we're doing there. Pretty cool.
I will definitely have all the information in the description box for my viewers. And the best part is, you know, you mentioned telehealth, health. I mean, AI and quantum, it's going to revolutionize the
Yeah,
medical world.
it
So
will.
definitely looking forward to that. So Sylvia, amazing wisdom, knowledge, and thank you so much for sitting here with me today. I know you're a
Thank
very
you.
busy person, and thank you for introducing and creating this Elon BattleShares ETF, one of a kind. I am highly interested, and I know many of my viewers who are Tesla fanatics, they will definitely be looking into this as well. So Sylvia, thank you so much. And third interview will be around the corner, and you can update us with everything that's happening. So until the next time, my viewers, stay
Thank you.
ranting.